Good morning and welcome to the market forecast for Thursday, March the 14th. I'm John Hoagland. Thanks for trusting me with your time. Glad to see so many of my fellow futures traders, family, friends, and Forex traders here. We've got some interesting things going on in the markets. Pretty data-rich day. A couple of them today and tomorrow. As always, we're going to look at these markets, and I hope you are looking at your markets through consistent lens for context, as well as looking through the lens of risk management. Starting this morning at 7:30, the jobless numbers came out. Both of them lower than expected. That's good. We've seen some recovery in our U.S. equities after that came out. Friday's unemployment number is expected to remain at 6.3%. There's some kind of smaller numbers that might also influence trade tomorrow morning. So we'll be looking forward to that. A lot of, I think, posturing and hedging in investors and in traders for the better part of this week in expectations for that. We've got factory orders, 9 o'clock Central this morning, 9:30, the nat gas numbers due out, and 11:05 Central. Chairman Powell speaks for the last time before the FOMC meeting, which is 2 weeks from yesterday. We had the beige book yesterday that always marks 2 weeks until the FOMC meeting. As far as other news is concerned, global stocks, U.S. stocks at least, are set to open relatively steady. We've seen a little bit of a pullback off the lows here. Treasury yields continue to threaten higher. We've seen a pretty good change, steepening of the yield curve, if you will. The focus today, I think, for the rest of the day after the early numbers here is, of course, going to be on the Fed chair as he speaks. Again, his last speech before the FOMC meeting. A lot of focus is going to be on the OPEC and crude oil market this morning as well. They are set to set production quotas for April. An increase of 1.5 million barrels per day is at least expected to cover global demand, which is expected to recover as the COVID infections kind of decrease. So we've started to see a little bit of news from that. It's already affecting the crude market. We saw some things on Twitter from Russia as well as from OPEC that they feel as though they've done a good job. They're not necessarily out of the woods yet as far as making sure that they manage supply correctly. So crude oil traders already kind of bolstering the action to the upside here. All right, so we've seen some action in the metals too, at least some of the base metals like copper and nickel. They've had a pretty stiff correction off their highs this week. Some of the precious metals really just kind of languishing off lows here. We've seen a couple 3 opportunities near the weekly kickoff low in gold. 2 of them overnight, one of them yesterday with a pretty deep dive down below it, but some pretty stiff rejection there. We're going to look at that on the charts here very shortly. The VIX down a little bit this morning, 25.96. Dollar index up a little bit, back up above 91 at 91.18 last time I checked. Make sure you like, share, comment, question, feedback, and heckling are always welcome. I always enjoy a good heckling, and I usually deserve one. Make sure you subscribe to our YouTube channel so you can get notified when we do go live. As always, like to check in with everybody. Good morning, Ralph. First in the room, you win the prize. Felix Escobar, good to see you. Rocker, yeah. Richie, Brian, Danielle, Brian. Bulldozer, good to see you. Murph, great Thursday morning to everyone. Today is the day. Make it the best Thursday. Murph, love your positivity. Awesome. Steve M., my brother Rick, good morning. Bill Phillips, good morning. Tanya, Javier, the official Javier Torres, good to see you. Shady Trader, what time is Powell speaking? 11:05 Central Time. I see Murph sent that in also. Caesar, James, good morning. Rob T, Tim, Ashton, Magnum, Ashton, still waiting for my funded account. Getting bad withdrawals. Well, yeah, sometimes, depending on how busy they are and how busy the clearing firms are, I'm sure they're working very diligently to get you to your funded account. I'm sure you're getting some withdrawals. Just make sure you take it easy. Just stay in the same process that got you to the funded account when you get to the funded account. It's sometimes a little bit of a change in decision making when you get to that level. Just relax, be ready when it comes. Stay calm, stay cool. Keith, good morning. Rod, Troy, JD, the dancing bear in the room. Always good to see you, JD. Vast West, Angelina, Oleg, Mike, the chef is in the room. Shady Trader. I'm gonna start the heckling soon. I'm ready for you, Shady. I'm ready. Jason, Jonathan Cruz. It looks like a relatively new name. Welcome, Jonathan, if this is your first trip here. And if it is your first trip here, say hello. Let us know you're here. Mike Mayanes just watched copper recover all of its losses from ETH, extended trading hours. I was on the sidelines. I was not happy about that. Pretty shocking, though. Yeah. The copper is such a vicious market. It's another one of those markets that gives me heart palpitations. Shane, good morning. Chris and Ashton, good morning. Will do. Okay, good. Calm, cool, collected, stay in the process, use the same decision making. All right. Let's go ahead and jump in and take a look at the charts here. As always, I like to start with the daily in crude. Let's take a look. So we see the market already moving higher. It's been a pretty decent change in the market since this morning when I sat down to start my notes here. We are expecting some higher demand as COVID infections kind of start to peel off, and we're really hoping that does happen. Although, when we look at this, we've seen some pretty decent volatility up in this area, but we are kind of keeping price relatively range bound. We've got our weekly kickoff low. We've tested it a couple of times this week, unable to accept down below it, which seems the next volley would be to weekly kickoff high, which is 63.80. Still awaiting probably some of the OPEC news. Volume remains pretty strong overall. It's not weak, it's not over strong, but there seems to be still a lot of interest in this market. And with an additional 17,000 contracts added yesterday in open interest, I would say that is probably a good thing. So as the pun says, there's still a lot of energy in the crude oil market. And it's going to be a fun one, I think, for the entire summer, probably for the entire year, as demand increases and the producers continue to balance how much they're going to be producing. So we're still seeing open interest increasing. Volume is holding up pretty well up here. It's looking like the auction process to the upside is taking a little bit of a breather, but still maintaining a reasonable amount of health. As far as the 30-minute is concerned, sitting down this morning, we were really rotational. There was no overnight inventory with which to look for when the tweets started coming out about the OPEC Plus meeting. That's when we started to get this move to the upside, which has created a gap. So we have now a gap situation. If we cannot close this gap relatively early, I will look for opportunities to buy weakness in the daytime frame in order to see this market continue the move to the upside, which could be kind of a focal point up at 63.80, which is our weekly kickoff high. I don't have my mark on there, but it would be all the way up here. So again, if we can't close this gap, I think there's a decent probability of a continuation and a possible check of that 63.80 level today. A lot of it depends, of course, on the headline risks. What else are they going to be saying from the OPEC Plus meeting today? So if we're going to be watching that, one of the quickest places you might be able to get news on that is on a Twitter feed. But how dependable is it? That's up to us to decide. An interesting opportunities today and every day in crude oil. It is certainly one that is on my radar. S&Ps. Start with the daily. Okay, so obviously interest rate fears, inflation fears, unemployment fears are all weighing into what's been going on in the equity markets. And I'm getting a little chunkiness here in my charts. Sorry about that. I just want to make it so everybody can see. I just took away my 5% level there. Hang on. All right. All right. Let's cooperate. Let's cooperate. Okay. All right. So 3761 is a 5% correction off the all-time high here. Look what we did last night. We got pretty close to it, 3777. Relatively close. On the daily chart, it's still holding upside structure. If you look at look at things the way I do, we've got higher highs, we've got higher lows. Overall, I don't think that we're at risk of breaking upside structure in the S&Ps today. However, it's a little bit different than the NASDAQ. We've been saying they're same but different all week, and it's very obvious now. We've got unemployment questions keeping pressure on price, as well as interest rates. Upside structure again remains intact. What's that mean for us today? How are we going to act today in this market? So this 38.58 level has been support. It's been resistance. It's been support. It became resistance yesterday. It was a really tough, choppy day around that number yesterday. And I think we're kind of showing some possible acceptance down below that level. We have settlement all the way down here. We've closed below it yet again. Doesn't mean that we can't go back above it, but 38.1675 is settlement. We've got maybe some cautious overnight shorts, but we keep resolving or reconciling back to settlement. That settlement price magnetic for us today. So are we going to open with a gap? There is a probability. Maybe yes, maybe not. Good morning, Savant Playback. Good to see you. Jason Jonathan. Rocky XL, good to see you. That looks like another new name. Welcome to the market forecast. Anyways, so are we going to open with a gap or are we not? We don't really have any overnight inventory with which to lean on for an early opportunity. So I'm going to be kind of depending on whether we accept in yesterday's range or whether we reject yesterday's range. Overnight high might be a kind of an important level, and we were talking about how important overnight highs and lows can be. This might be one of those days where it might be relatively important. Because if we can't get above that, if we can't take that out, it's a bigger probability that we may reject yesterday's range and continue to the downside. Again, there's going to be a lot of headline news. We have Powell speaking at 11:05 Central Time. It's his last speech before the FOMC meeting. Who knows what he's going to say? Are we just going to kind of hang around and wait for him? What are we going to do? So I'm going to try and stay patient. Again, I'll be watching to see if we open with a gap. If we can't close the gap, I'll use the gap rules and look for opportunities in the direction of the gap and look for opportunities to get in short unless we close the gap. Here's the NASDAQ. A little bit of a different situation. Same but different. Down to the 10% correction level last night. Okay, we're wrestling with the 5% correction level in the S&Ps. This is a more likely a bigger possible market state change in the daily chart. On the daily chart, I'm seeing a possible market state change, and it's going to be confirmed if we accept down below this 10% level. Okay, weekly kickoff low in the NASDAQ is basically 10 points below that, 12,500. It's almost the same zone for the NASDAQ. It's not that far apart. So volume and open interest in the S&Ps did not indicate continuation or an addition of bets on the short side yesterday. We lost 9,000 in open interest in the S&Ps. On the day yesterday, we had some pretty decent volume, and we added 12,000 in open interest. Same but different. This down move with the increase in volume and open interest tells me that there are probably some pretty good bets on the short side coming into this market. Now, if we can't get below this 10% level or the weekly kickoff low, we may end up getting a little too short, and we may see a decent move back to the upside. So that's one of the things I'm going to be looking for. Are we going to be opening with a gap? Maybe, maybe not. Again, same situation, same but different. Okay, here's that weekly kickoff low. 12 5 10 is 10%. We got a pretty good look at it last night. We've moved back towards settlement, no overnight inventory. Really the kind of question is going to be, are we going to open with a gap or aren't we? Are we going to leave the opening range at the low or the high of the range or aren't we? Are we going to be holding positions or into Chairman Powell's speech? Will Batman beat the Penguin? We've got all these questions out there, and we don't have any answers for them, so we're going to be looking to limit our risk. Remember, always think about limiting risk. So it's similar but different. I'm going to be looking for opportunities to use the gap for an early opportunity to limit risk. If we can't close the gap early, look for continuation to the downside, perhaps for another test of our overnight low, which is a kind of a triple whammy because it's the 10% level, it's pretty close to the weekly kickoff low, and it's the overnight low. Hey, target-rich environment down here. My focal points today for the NASDAQ will be our overnight low and our overnight high initially. Overnight high, point of control. Gap, that's going to be one of the first things I'll be thinking about. Opening range trade, possible? Only time will tell. Gold. Boy, this gold gave me fits yesterday. All right, so obviously we have some pretty decent downside structure in the medium time frame, and even I would call this some of the longer time frame. We've got 3 days testing weekly kickoff low down here. Volume was just okay yesterday. I don't think it was all that great. And we lost open interest. It isn't like we had a bunch of sellers coming in trying to push and keep this market down below this level. As a matter of fact, it looks more like we found buyers down there and rejected that level. But the more we test this weekly kickoff low, the more likely we are to exhaust the buyers down there. If we ever find any acceptance down there, those buyers may give up and maybe turn the other direction. So my focus today, the focal point is certainly going to be on weekly kickoff low to 1704, as it was for the last couple of sessions. We got to chat. We got to look at it last night. I don't know if we're going to get another look at it today. We lost open interest, 1,200 in open interest. Volume was just okay on this move to the downside. So again, it doesn't look like we are barreling in for another big push to the downside here just yet. 30-minute chart. No overnight inventory. No overnight positioning to work with. Opening in value and in range suggests trying to stay patient. Well, we're going to have to do that because we've got an important inflection level that's proven to be useful for us down below. We've got our overnight high, which is relatively close to the range high from yesterday. So anything in the middle here, I'm just going to try and avoid. The market is really kind of digesting this new area and deciding whether it is going to continue its break to the downside in the longer and medium time frame, or if this may be a kind of a low for a period of time. We don't really have anything really to hurry about in this market yet. Just a couple of focus points. Focal points again: weekly kickoff low, overnight high, high of yesterday's range. Anything in the middle, I'm not interested in. You could almost say it's off the radar, but nothing could be further from the truth. I think there's some pretty decent opportunities coming. I just have to stay patient for them and wait for my opportunity. Euro? Still kind of off the radar, folks. Still centrally located between weekly kickoff high and weekly kickoff low. I understand that they're pretty far apart. We lost 2,700 in open interest yesterday on lower volume. It seems as though people are just kind of getting out of this market, looking for something new to happen in it. Lacey is saying good morning. She's actually saying good morning to a passing dog, but she is saying good morning to us as well. Lacey, be a lady now. So again, we're kind of stuck where we were yesterday. I'm not seeing any big opportunities, not seeing a lot of interest coming into this market. As a matter of fact, for a few days now straight, we've seen open interest losing in this market. So some of that oomph is kind of stepping away. So that's kind of why it's got me kind of off the radar on this. Doesn't mean there's not some decent opportunities. We've got settlement all the way up here at 120.68 and a half ticks. We've got all of our overnight activity pushing price lower. If we're not going to be finding continuation in longer time frame pushing this market lower, there is a probability that we may close this gap. And if we close the gap, that may take all of these overnight shorts and make them a little bit nervous and push price back towards settlement. Focal points, overnight low, settlement, and overnight high are the same. Those are going to be my kind of interesting areas for us today for the euro. And the 10-year, we've had this little bear flag here. It looks like we've kind of broken out to the downside and kind of fallen into digestion. Everything depends. Everything seems to be depending on the yields, as my brother's talking about. Even watching the yield when it comes to with regards to gold as well. So the 10-year just kind of holding, digesting, looking for the next information, looking for the next move. We lost 30,000 in open interest yesterday. Still possibly a function, and we still have not expired the March contract. We are in the June contract, however, now. So a lot of that open interest may just be liquidating June contracts. Here's the 30-minute to see if we see any kind of early opportunities, and I'm really not seeing that much here because, again, we don't really have any distinct overnight inventory with which to lean on. We don't really have anything outside of value or yesterday's range with to think about. So if the rates just kind of hold steady here, I think we are going to see some consolidation here for a period of time. And then, as far as the focal points today, you know me, I'm always thinking about the extremes. I'm always thinking about where I can limit my risk. And anything around our overnight low and overnight high, range high from yesterday, range low from yesterday is more of an opportunity than anything that I'm seeing in the middle of this. Again, there's no overnight inventory. We're trading at settlement, which, by the way, is 133.01 and a half ticks. Not much to do here. A little bit off the radar as far as short term. Something changes, I'll be monitoring, but I'm not really in a hurry to get into anything in that 10-year just yet. And again, as my brother's pointing out, a lot of what we're going to be watching and what we're going to be thinking about is what are the yields doing? If they continue to creep higher, that may put some more pressure on some of the other income assets. So Naren Patel, good to see you. Rocky XL. Roger, some new names. Thanks for popping in. Glad that you're here. You ever have questions, let me know. All right, we've got, it was a great session yesterday for the group session on Wednesday. I want to put this in. Don't forget, we're going to have the group session again next Wednesday, but I want to remind everyone that Dr. Menaker is back next Wednesday at 3:15 Central Time. The clinical psychologist, also an active trader, is going to be here to help answer our questions. We're working on a kind of an overall subject right and as we speak. But there is the link to register for market therapy. Again, that's 3:15 next Wednesday, March the 10th. Always a great opportunity to speak to a true doctor, professional trader, and we really appreciate him being here. So, make sure that if you have questions, you have them ready. And we will still be having the group coaching session at 1 p.m. Central on Wednesday as well. Roger, that's okay. We'll be doing it again next week. Probably Monday, Tuesday, Wednesday. I'll be putting both links to both of the events next Wednesday in the group chat here and on our forecast, and you've always got the opportunity to come every time. All right, I've yammered on long enough. I'm going to take my deep breath. Stay humble, grateful, and creative today. I believe Dan the Man Hodgman will be back for the market recap today. I had to cover for him yesterday, and I'm looking forward to seeing him back today. Get hungry, get out there and profit, trade well today. Looking forward to seeing you soon. Looking forward to seeing your success. Have a great trading day.